Another video. Today we're going to go over exactly why we can expect the US dollar or the US to go into a recession in due time as we continue with what's currently going on. Now, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, it is no surprise that the dollar has been very bullish. Now, the dollar has been bullish since the 1st of June last year, since Powell came in and started pumping money into the market as well. But there's a good saying that goes, all good things will come to an end. Now, the dollar index, yes, is quite bullish, and we can definitely expect it to be further bullish for the duration of time. But what happens if you pump too much money in the market? What happens if you hike interest rate too much? What happens to consumers that needs to spend in order to keep the economy growing? What happens? Well, ladies and gentlemen, the stock market crash. Now, if you've been on the channel for far too long, you probably know that by now. We know that as interest rates go up, we know the stock market goes down. But the question is, if interest rates are going up and the stock market's going down, and companies listed on the stock market is employed by people, does that mean people will start losing their jobs? Because companies listed on the stock exchange, they earn a revenue based off what consumers spend. And if the stock market crashes, that means businesses won't be able to generate an income, meaning that they won't be able to pay their employees. Now, we're going to jump into that as well, because we're starting to see that pattern starting to play out also. Now, before we get started, it's important that you are educated on a recession. Now, to put it in simple terms, okay, a recession is basically a downward trend in the business cycle, characterized by a decline in production and employment. Now, listen properly: in production and employment, which in turn causes the income and spending of household to decline. Even though not all households or business experience an actual decline in income, the expectations about the future become less certain during a recession. That basically means is that with the way things are going on now, we can definitely expect the unemployment to drop. Now, remember, as the recession is caused by two things: downward trend in business cycle, which means if the stock market goes down, companies' valuations are determined by how valuable their stocks are, and if it's worth not that much, then they don't generate that much of a profit on there as well. And we're going to get into that information as well. Now, it's clear that Powell said that they will aggressively hike the interest rates, and the reason why they're going to hike the interest rates is no question because why inflation rate is basically sitting at an all-time high. It says here US inflation hits a 40-year high, jumping to 7.9%. That was there. We're now in March and it's sitting at 8.5%, meaning it's now even higher compared to what it was 40 years ago also. Now, we're going to take this one step at a time. So inflation's high. The only way to tackle inflation is to increase interest rates. But by increasing interest rates, means that the stock market is going down, and it's going to hurt the employment. So the unemployment was good enough to continuously come down. And we can see what the unemployment was quite high throughout the pandemic period. When COVID came, unemployment skyrocketed to 6% there. And then slowly, as things started to gradually become right again, this was the time the stock market fell as well. And we can see how things started becoming better also. So it started to pick up. But what happens now is if they're going to hike interest rates, and consumers because interest rate hikes are there to encourage consumers to spend less, meaning that people will not be spending as much money, or they are not capable of spending as much money as they did when the interest rates were quite low. Now, we know that there is high plans for the US to hike the interest rates, but interest rate hike is going to hurt the unemployment rate as well. So we're slowly going to see the unemployment rate, meaning that we are going to start seeing negative NFP data with the unemployment change going down and down. And we started to seeing that last month already as well. We're getting the ADP today, and we're probably going to see some low numbers coming through on the ADP, but we're going to see the unemployment rate increase as well because the stock market is going down. And if we quickly look at what happened to Netflix over here, Netflix lost 200,000 subscribers last week, and this headline on the 29th of April is now reading Netflix fires employees after losing subscribers. And we can slowly see this happening here as well. Amazon also listed on the Nasdaq. It says here Amazon workers sees a video of staff being laid off, so people are starting to get either fired or retrenched. Now this is quite interesting, right? So Elon Musk comes out of nowhere firstly and buys Twitter. Not only does he buy Twitter, but he sells 8.5 billion worth of Tesla shares. Now, why do you think my good friend Elon Musk sold 8.5 billion worth of Tesla shares and bought Twitter? Because my friend know that the stock market is going to crash in the short term. That's why he went and he sold 8.5 billion worth of Tesla shares, and he purchased some he purchased Twitter, and that's a story for another day. But he knows exactly what is about to come, because I'm sure he knows people that we don't know. And as a result of that, Elon Musk is like, you know what, guys, I'm not going to wait for all of this to take place. I'm getting the hell out of here right now. And then boom, he sells 8.5 billion shares there as well. Now, when what's going to happen is that as they increase interest rate, as they hike interest rates, the stock market is going to take a knock, and we're going to continuously see people being laid off by their companies, or continue being laid off by their companies. And as a result of that, the unemployment rate will continue to skyrocket. And as a result of that, businesses will not be able to make any money because the consumer spendings, the inflation will be down, but nobody would be able to spend because they don't have jobs, because companies are doing bad. As a result of that, you'll have the US jump into recession as well. And when that happened, and or whenever that happens, and as people then go, it's fine, inflation's low now, and then having to go back to work, we can then see the stock market recover. But for now, there is some upward momentum expected on the US dollar, but I don't think it's going to last long, because with every interest rate hike per month, it's just going to make it more difficult for companies to sustain their employees, and US companies are going to struggle to pay the employees, and we're going to see a lot of companies close out as well. Guys, please listen to me properly, okay? This is good opportunity, especially to buy the stock market when the U-turn comes. You want to be in there, because then you'd be able to ride the wave all the way to the upside. Now, that is it from my side. I want to say thank you for your time, and as always, good luck and cheers for years.